In this episode, I'm going over CoinMarketCap and answering the top 10 questions asked. Let's do it. Hi, my name is Nick. I'm a crypto CEO, and in today's episode, I'm covering the top 10 questions asked when it comes to CoinMarketCap. So why CoinMarketCap? Well, it's a tracking website that gets used a lot when it comes to making buying or selling decisions, get more information about projects and things of that nature. It's used a lot. It has 340 million page views a month. It's been around since 2013 and currently is owned by Binance. So an important website, has certain definitions and certain things of what things are and what they mean. A lot of misconceptions. People make mistakes. And so that can lead to a wrong decision or an opinion of a project. And so I hope in this episode to address these things and to give you a better understanding of how it really works, and with the ultimate goal to give you insights that will make you a better expert in terms of crypto. So without further ado, let's get into it. The first question is, what does a market cap mean? Well, that's a good question, because a market cap definition from CoinMarketCap is different from, let's say, a PooCoin or a DEX tools. So the market cap from CoinMarketCap, when you hover over the I button, it gives you it's the market cap is the current price in dollars times the circulating supply. I will cover what is a circulating supply in a moment. But that is their definition. That is, for example, different from a PooCoin, which takes the current price times the total supply. So the total tokens that are available. So you will get a very different number, and that can be millions apart. So keep that in mind, that the circulating supply times current price is what CoinMarketCap uses as its baseline. So that's important then to understand what is a circulating supply. So when I go to a certain project, you can see it. And they are, their definition is the circulating supply, for question number 2, what is it? Is the amount of coins that are circulating in the market and are in public hands. Okay, great. So that means that tokens that can be traded amongst people. What they don't tell you is they have 2 different circulating supplies that they show on their site that are very different from each other. A circulating supply that is self-reported is a project that they can report any circulating supply they want on the website, on CoinMarketCap, and they can say whatever they want in terms of the amount of tokens that are circulating. So the trustworthiness of if that's really the circulating supply or not is debatable. I can fake it very easily if I want to. There's no check from CoinMarketCap on the circulating supply whatsoever when it comes to the self-reported circulating supply. They do warn for that. So when you go to certain projects, you get a warning sign, but many people don't look at that. So again, it can lead to very wrong understanding of what the market cap really is. Then, if it's verified, so that's that blue check mark over here, it goes under a certain standard that I would say 99% of people do not know. So yes, it's verified by CoinMarketCap that this is the circulating supply, but what does that really mean? It doesn't say when you hover over it. So it's just whatever CoinMarketCap determines what is circulating. So this comes from me myself, that I know for a fact, because my project is verified and I know what they do count and they don't count, and we had to go over every single wallet with CoinMarketCap. So a quick summary of what does not count as circulating supply. Any private investor, marketing operations treasury, ecosystem incentives or ecosystem treasury, any team, advisor, or contractors tokens, regardless if they are locked or unlocked, are not counted as circulating supply. So as you can imagine, especially with projects with a lot of venture capital, you can get a very different outcome, or again, depending on your definition of what is circulating, to what is reality, or what maybe the private investors do have tokens that they put on the market. So one could argue that is circulating. So again, my point being here is that it is definitely a standard that's the same across one project to the other, so it's useful, right? So it's definitely more useful than when it's just self-reported circulating supply. When it's verified, it's more useful. because it has the same norms, but it doesn't mean it's the 100% source of truth. How do you know? Again, depending on what your definition is of what should be counted or not. So how do you know? Well, you know when you go to a contract of a token, you then look at what's the total supply, you go to holders, and then you look at which ones are unlocked and which ones have a contract. If they have a contract, it depends on what kind of contract it is. So you would have to go into each and every one. So this, for example, if you would click on it and go deeper, you would see that it's a staking contract. So it's our staking pool. This, you would see, it's also in the name here, is our PancakeSwap liquidity. So definitely circulating. But even this staking contract, like, is this circulating, yes or no? Well, in our case, I would argue, yes, it is, because you can unstake it at any point in time. You would have to pay a penalty if you unstake it within 3 months. If you unstake it after 3 months, there's no penalty. But again, it can be unstaked. So in my head, at least, it should be circulating. But again, you can debate about these type of things, if they should be counted or not. And depending on your worldview, you should make up your mind. It's important because a circulating supply determines the size of a project and the market cap. And that in turn then determines how likely or unlikely it is that it has upside potential or not. Is it a small cap, it has more upside potential than a mid cap or a large cap, right? The bigger the project, the less, or the harder it is to do 100x. It's easier to go from 1 million to 100 million than from 100 million to a trillion, right? Okay, so that is key to know when it comes to understanding what a circulating supply is and how it can be used. Okay, third question, what is a fully diluted market cap? Well, it's basically that other number that KuCoin or DEX tools uses. It is if you take the max supply or the total supply, depending on the situation, if it's the same or not, times the price. So that is if all the, based on all the tokens that are in existence today, times the current price, you get the fully diluted market cap. How useful is that? Well, it's useful to know both, because if in this case it's 90% of the total supply is currently in circulation, that means that there could be 81% in the future being added into the circulating supply, aka it's inflation. As we all know, the more inflation there is in the world, the less the value is of that particular token or project, right? So in a general sense, when there's a huge difference between the fully diluted market cap and the normal market cap, it is risky. So you would have to know, where is this money locked in, or how will it come into the market, how fast? If it's too fast, if there's too much inflation, it would be very seriously dangerous for the price, and it's not good. In a general sense, if there's still tokens vesting from any private investor, that's usually a bad thing for the price, because they tend to sell. Besides the fact if they got it for cheaper or not, just in general, if the more tokens get into the market, it is a bad thing for the price. So keep those two things in mind. And again, once you notice this, you can then also dig deeper of what is this 81% then? Is that the ecosystem? Is that staking? Is it, what is it? Yeah, you have to do some digging to really understand it before you could make a serious comment about if this is good or bad. You would have to know. And you cannot see it from the outside, but it gives you an indication of where you should look. Okay. So what's the difference then between max supply and total supply? That's the question I got asked. Well, the total supply is all the tokens that are in existence today. So these are all the minted tokens. These are just the tokens that technically are out there right now. You could see that as I've shown you here directly also when you go into the smart contract side of things, or if in the DEX details. The max supply is the amount of tokens that could be minted or are going to be minted if it's in the smart contract. So certain projects have a automated inflation model where certain tokens get minted over time and get added to the total supply. That could even be unlimited. There could also be a mint functionality into the contract that you can just add new tokens to a project. That's of course very dangerous again if you can simply out of thin air create 1 billion more tokens, then the value of the token will most likely go down. So it's important to know if the max supply and the total supply are the same, and if it can change or not when you make a decision if you should buy or sell a token. The problem, for example, of Luna was that it could be minted, right? So the new stuff could be added, and you get this death spiral of inflation, where the price goes down, more inflation gets triggered, and so forth. So very important to know, and ideally there should be no minting if possible. But again, certain projects have it for certain reasons. So again, it depends also on the situation. But as a baseline, you could argue that it's not good if there's inflation. And as I said before, the circulating supply should be as close as possible to the total supply if you want the least amount of risk in terms of new tokens being dumped on the market. Okay, then on to check on exchanges, on where to focus your energy on, where you should buy them. So when you go to exchanges, you can click on spot. These are the centralized exchanges, and they have a certain ranking. So a question that got asked was, how does the ranking system really work on CoinMarketCap, and can it be trusted? So the ranking exchange score is a mixture of factors. It has web traffic, average liquidity, volume, and confidence in certain volume. And yeah, that in itself gives the site a ranking that is automated, by the way, on each exchange. It's no surprise that Binance is number one when it's a Binance own site, but let's be fair to Binance, they are the biggest website, they are the most trustworthy, so it's only natural that they're number one. But it has a bunch of numbers in here that I think are key to understand the deeper details of it. So volume, especially with a centralized exchange, can be manipulated, can be faked very easily. Even if the confidence level of CoinMarketCap is high, that the volume is quote unquote real, it can still be wash trading. So a project that trades with itself to just simply create volume, to give the illusion to people that the token gets traded a lot. And especially smaller exchanges will do this. So what you cannot do is simply click on here for, okay, give me the top volume, and then assume that this XT has more trading volume, for example, than a KuCoin. Like, it's just not true, or an FTX, right? It's just simply not true. It's fake. How do I know that? Well, I know it because I've worked with lots of exchanges over the years, and some of them offer a 0% trading fee cost for market makers to simply pump volume. And so then it's very easy to fake volume. So I would argue that especially on centralized exchanges, the volume number is not trustworthy in a general sense, unless it's maybe the top 10 exchanges, then you could trust a bit more. But even there, they typically do exchanges give a hefty discount on the trading volume or the trading account for the market maker. So again, maybe it wouldn't be free, but it will still be easy to manipulate. So take it with a grain of salt when it comes to trading volume. It's not the holy mecca. I will cover trading volume in a second a bit more, but let's go over other things. So average liquidity is let's say the amount of tokens of a project that is added on the exchange. If it's high, that is good. That means that it has a lot of buys and sells availability on the exchange for traders to use. So the higher the liquidity in general, the better. Then the amount of coins that are listed on a exchange are essential to understand, especially in relation to the trading volume. It's only natural if there's more tokens listed on an exchange that the trading volume would relatively be higher. So the lower the amount, and if the trading volume is still high, equals that there's lots of trading volume per token. So you can divide these two. Again, keep the volume numbers a little bit with a grain of salt, but it gives still a decent indication. Of course, it matters. If your Gate, for example, there's 1,500 tokens listed, or Binance that has 387. That's a massive difference. And so it does matter. Weekly visits is based on SimilarWeb. Now, SimilarWeb is an interesting website. It tracks the amount of people that visit a website. So let me go and show you from my own website, for example. So here you can see the traffic then, right, of how much traffic visits the website. That is pretty reliable. It's not rocket science, not exact math. And at the same time also, it can be faked. I can buy very cheap traffic and send it to my website. And then I can have high numbers showing on SimilarWeb. Now, as a project, doing that is not very common, I would say. So, you know, not really something that happens a lot. But as an exchange, since it's linked in this ranking, definitely is being done. So keep that in mind when you look at these numbers. I don't know which exchange does it or which one doesn't, but I do know that it's very cheap and very easy to manipulate. So do not use the weekly visits as the holy grail again to determine if the exchange is really used a lot or not. It is, again, it's a mixture of things. So I would argue that the exchange score is a pretty good, reliable thing to use, or as best as you can be, to determine if the exchange is, if you can trust it or not. For yeah, and then in terms of trading volume, if you go again to a project, let's go a little bit deeper. So trading volume is based on the last 24 hours of how much volume the project has had, how much trades have happened. If you click on markets, you can go deeper per project. And then this is the confidence that I was speaking about of how certain CoinMarketCap is that this is legit trading volume. And so the CEX ones for centralized exchanges are less reliable. The DEX, the trading volume, such as PancakeSwap, is more reliable. And so that answers the question really for what's the difference between CEX and DEX. Well, a decentralized trading volume is connected to the smart contract and the interactions that are happening on the token itself. So each trade that you see is here in transfers gets track of. So in this case, we have 628,000 transactions, and this comes from decentralized trades. They are just on the smart contract. They cannot be manipulated or faked. They also would have to pay the same amount of transaction cost for a retail trader or a market maker. So again, it cannot be manipulated. So it's more reliable when it comes to trading volume to look at DEX trading volume because it cannot be tricked. A trade on a centralized exchange does not move in terms of the smart contract. It's not being interacted with. It's just happening on the centralized exchange itself. So that's really the difference between the two. And so typically the DEX volume would be lower than the CEX volume. That could also be because the CEX is just bigger, it's more used or whatever. But in general sense, that's typically what tends to happen. I would say when you look at volume and volume development, if the token gets traded a lot or not, I would definitely focus more on the DEX volume than on the CEX volume in terms of confidence, especially if the CEXs are smaller centralized exchanges that are least trustworthy, let's say. Then I would definitely focus on the DEX volume to determine if there's any buying or selling pressure. Is it bad or good if a project has a lot of volume? Well, it's both bad and good. If the volume is very low, that means that your buy or your sell will have a bigger impact. So the price will move more because there's barely anything going on. So there will be less counter selling or FOMOing in. So the price movements would be more connected to your single buy or your single sell. In general, though, I would say that it's probably better if there is some volume. And I would take it as if the volume is smaller than the market cap per day, that would be considered, I would say, reasonable or good. If it's higher than the total market cap, it's usually fake. So just keep that in mind. It doesn't have to be, but in a general sense, 9 out of 10 times it would be. So just keep that in mind when looking at these type of things. yeah, it's not good if the volume is higher than the complete market cap. That basically means that the entire value of all the tokens that are in circulation are being traded in a single day. Again, not very realistic. Again, can happen. It can, especially when it's trending or something crazy is going on, a big event. But in a general sense, typically doesn't happen. Okay. Then in terms of trending, speaking about that, so it's not always, right? So right now I don't see it, but sometimes you see here these three buckets here of, let's say, trending, some community updates, and recently listed. Right now I don't see it, but it is under cryptocurrencies, and then on the spotlight, you have these different things: trending, biggest gainers, recently added, that's that recently listed, and then most visited. It's useful, but again, it's also very misunderstood. How is trending based? You cannot find it anywhere. I know how it works, but yeah, lots of misunderstandings and misconceptions of, can you trust trending or not? In general, I would say trending can be decently trusted, but it can also be easily manipulated. So how it works is, it's the amount of CoinMarketCap page visits. So how many people visit a specific token on CoinMarketCap, how much trading volume is there, and if there has been a trend upwards. So if there's lots of, let's say, a big growth of amount of trading volume. And then it's also manually being monitored and edited by a CoinMarketCap employee, which has, in the past at least, been able to be bribed. So there have been honeypots or scams even trending number 3. And that's because they've manipulated the first 2 things, but then also got some help from a CoinMarketCap insider. Unfortunately, these things happen. You need to know that it's a list that is sometimes on the front page of CoinMarketCap. As I said, there's lots of viewers, so it's very prone for abuse. Again, I haven't seen it recently, so maybe things are better these days. But again, keep that in mind, that has happened in the past. So just because something is trending does not mean it's actually trending or it should actually be taken serious. I would argue that if you look at the top 100 projects, you can take more rest assured that that is legit, and it is useful to know which project is being looked at the moment the most. That doesn't always have to be positive. It can also be trending downwards, right? So it's just that how many people are in it. In a general sense, you do want to be in, for a large cap at least, be in projects that have lots of trading going on and people going in or even out. When they go out, then you have a better opportunity for buying it cheap. Most visited is also very easy to manipulate. That is, I can set up a proxy, just bombard my page to get lots of traffic. So again, most visited, useful but not perfect, and can be manipulated even more easy. And then recently added, that is new projects, right? So keep that in mind. Very risky, usually all small cap. So interesting to see when new project is added. But yeah, keep in mind you could lose a lot of money. It's really casino gambling at that point. Okay, so that's how trending works. Then we have another thing that I think is pretty good from CoinMarketCap, which is the free airdrops. Why do I say that? Well, first of all, thing that you need to know, and how does it really work, right? An airdrop on CoinMarketCap, you need to pay, so it's not free. It costs quite a lot of money to do the airdrop in the first place. So that creates a barrier that is good, because it filters out the shit and projects that shouldn't be taken serious, because they don't want to even invest 10, 20, 30K in an airdrop. In terms just cost for CoinMarketCap. So that's one. You have less shit. Then the other thing is that CoinMarketCap picks the winners. So that's good, because if the CoinMarketCap would not do that and the project would do it, then it can be faked. And I can just name a bunch of winners and they're not really winners. Like, it would be hard to check. If a project decides to do that with this, then there's repercussions, because CoinMarketCap decides who wins. And so if there are people that did not get the reward that they won, then there can be repercussions from CoinMarketCap to the project. So that's good. And no other airdrop would have that sort of power. So it is good if I'm you, I would just focus on these type of airdrops and ignore everything else. So I'm not saying this is a fantastic project, by the way, but this has an airdrop. And another thing to know is that, and this is just an insider tip here, the only things that CoinMarketCap really tracks is these two things. So it's adding it to your watch list and following it, following the community page. Everything else, yeah, nice, but doesn't, it doesn't get tracked. So it doesn't count, or it doesn't matter. You should probably still do it. I mean, it's nice for the project and all that stuff, but just so you know, it isn't tracked. They can say that here, but it's not. I can guarantee it to you. So that's really how the airdrop works, and then the project gives out either the NFTs or the tokens after the period. So yeah, that's how it works. And again, pretty useful to get introduced to projects. Again, not necessarily saying this is a great one, but sometimes there can be some good ones in there. And especially projects that are starting out are interesting to follow. And again, it's free, right? So you can just join. Then the last one, how does the rank on CoinMarketCap work? So here's a rank. So the first thing to know, the ranking is based on your market cap size, okay? The larger the market cap size, the higher your ranking. So Bitcoin is number 1, Ethereum number 2, etc. However, there's also a thing that maybe some people don't know. Basically 2 different rankings, because every project that's verified and every project that's not verified are not treated the same. So in this case, this is a not verified project. So this is a self-reporting supply, right? There's this warning sign. So this market cap is not verified. And that means that they could never be in the top 2000 because they are in a different bracket, let's say the lower ranks. In this case, it's 5,000, but even if they had 20, 50 million, whatever it may be, they would not be in the top because they're not verified. And because, for the simple reason that I said before, you can easily manipulate the circulating supply, the self-circulating supply. So yeah, it cannot be trusted. When you look at the projects that are verified, so let's look at my own, then you get into the top, and it just simply is the market cap. Then from that point onwards, it's just the size of your market cap. And it is useful because the rank itself can be used to categorize projects into 3 different buckets, right? A large cap bucket, mid cap, and small cap. And with that comes risk association. So a large cap has, relatively speaking, less risk than a small cap. Also, there's with less risk, there's less upside. So it's more unlikely that Ethereum will 100x versus it's more likely that a small cap of 1 million market cap will 100x. Why? Because it's much easier to go from 1 million to 100 million than from 100 million to 10,000 million. So it just depends on the size of things, of where you should categorize that. And again, when you are diversifying your portfolio, you can use the rank to determine does this fall into a large cap bucket, a mid cap, or a small cap bucket. And then sure, there's lots of competition for who's on the top 100 in the first page of CoinMarketCap. So some people only want to do trading in projects that are on the top 100. But again, keep in mind that if you're doing that, then you have less upside potential as well. And usually when a project gets bigger, people are selling their tokens off to take profits. So again, keep it in mind when you're making your decisions. It's just a very different ball game when you're doing trading in large caps than versus small caps, and all the risk associated with it. Okay, so hopefully that gave you some good insights of how CoinMarketCap really works. If you like this content, please consider subscribing. It really means the world to me. I'm definitely planning on making new videos covering more topics into crypto. If you have ideas or questions about certain things, please leave them in the comments or join our Telegram, and you can ask and send me things directly. So very happy to make new content and see where this channel goes. of course, open for any feedback. And again, thank you very much for watching.